myself Sandeep Rastogi from Zwitch.io, and welcome to the third episode of What the F, where F is embedded finance. In this series, we discussed embedded finance with experts from the fintech industry. You can follow us and the previous episode of this series where we interacted with founders Mr. Ankush Javeri from Zackfruit and Mudir from SBNRI by the following link given in the description. This series brought to you by Zwitch, where we help startups and businesses create new avenues for your business and embedded financial services using our banking APIs. In this video, we bring answers to your questions on how open banking and embedded finance may accelerate adoption of technology and solve complex problems statement of your business. And today we have with us Prayas Mittal, founder of a revolutionary startup, Swift, to answer your questions. Prayas has a very interesting journey where he has worked with giants like ONGC, Reliance to start his professional career, and also worked previously with technology-led startups Urban Ladder and Flipkart. He is currently working on his dream project, which is close to 3 years now, that is Swift. So welcome again, Prayas. Welcome to the F.
Thanks, Sandeep. Thanks for the introduction.
So Prayas, logistics has been always an important and very challenging component of e-commerce thought, right? And it has emerged more powerful over the period and demanding as well, right? With these unprecedented times, what we see is people are likely to change their buying behavior based on two things. One is how they buy and how the end service is delivered, right? Based on this, how do you see this logistic industry moving, and what is the opportunity size here?
Sure. So I'll start with a brief background about Swift and then build on answer your question. So while I was working at Flipkart in the e-cart division, and my co-founder Sham was working at Pitney in their SMB logistics space. We had seen about 3 years back that there's going to be a boom in the requirements of SMBs and D2C brands that are coming up, because the likes of Amazon and Flipkart and all these marketplaces are leading the way in the customer experience that is provided by their captive arms like e-cart and ATS, right? So that is when Swift came into being, and we realized that we need to build a holistic solution of a platform that will enable these sellers, and this is what we are doing at Swift. So to put it succinctly, Swift enables sellers and D2C brands by delivering a one-click checkout platform which helps them enhance their customer experience via payments and logistics. Now coming to your question on logistics, specifically how the industry is going to boom and how is the market size opportunity in this area, I feel if you just look at plain numbers, around 10 to 15% of GDP is being spent on logistics. Similar number translates to if you see the e-commerce spend of any product that you get delivered. So let's say you're buying a $1,000 t-shirt or a 10,000 baht furniture, roughly around 8 to 15% of the cost of that product is going to go into logistics for delivering the product from the manufacturer to your house. And that's a huge cost, right? Now, what has happened over the last decade since e-commerce has boomed is there was a lack of infrastructure per se, the roads, the railways, the connectivity across India, and India being a very large landscape and a very fragmented market in terms of where people are living. There are small towns, there are big cities, then there are villages. So the reach and the network that needs to be created is huge, and which translates to a huge opportunity just in terms of e-commerce logistics, which is upwards of at least $10 to $15 billion. And if you take the entire logistic industry, that translates to about $100 billion.
That's great, Prayas. This is massive opportunity and allows multiple players to bring in innovation and unique problem statement, right? And which again is going to be a long-term solve for a lot of new startups and new age technology-led platforms, right? how GoSwift is doing uniquely. If you can bring that more elaborated approach.
So as I said, right, Goes Swift is a one-click checkout platform. Our ultimate aim is to enable a seller manage their post-checkout experience under a single umbrella and a single branding. Now think of it, it's like FBA for Flipkart, or FBA for Amazon, or FBA by Flipkart.
Mm-hmm.
When you are a seller on a marketplace, you enjoy a certain level of services, a tool, software tooling, which is not available under a single umbrella in any, as of now, in the market. Till now, we were building verticalized infrastructures on payments, on warehousing, on your logistics, on marketing, on cataloging products, right? We want to bring that one entire thing under a holistic umbrella and provide a one-stop solution to the merchant, where they can use Swift as a OS of sorts, or a single platform to deliver an experience that their customer wants.
Yeah. Got it. So again, coming to this infrastructure which is being built, you are thinking on different lines and solving this uniquely. Still, what you see that there is a great area and the concern where you as a partner or a delivery partner and brands which can be marketplaces and D2C, they want to solve for.
Yeah. So what we realize is that the brands and the D2C market and D2C founders and the SMBs, they are good at product discovery and product development, right? That is what they're good at. They can create beautiful design, they can create sustainable products, they can create everlasting products, they can get into the head of consumer and understand what their needs are and deliver those products by sourcing from multiple areas, by manufacturing them themselves, by packaging it in a manner which will attract the new gen and as well as the old generation, right? So that is what they're good at. What they're not good at, or what they do not want to spend time on, is the aftermath of product order placement, and that is where we come in, and that is the unique proposition, saying we are your channel, we are your partner for all things post checkout, which includes logistics, embedded payments, embedded warehousing, and maybe in future help on analytics across the board.
Makes sense, Prayas. Completely makes sense. Now, Prayas, again, to the follow-up question to this. Once you ensure that, hey, this is the delivery, this is the final delivery which I am ensuring, right? So again, the question which comes here is that how will you ensure that whatever is committed is also delivered, right? And second thing is how you ensure the consistency of services. Say, example, merchant one has experienced you last time and your NPS was high, while next time he feels differently, right? So how can you ensure what tools do you think that will bring the consistency in the overall delivery of the asked and to be delivered?
Got it. So there are two parts to it. One is the consumer experience. Second is the tooling that needs to be provided to the merchant. Now, because of the model that we operate in, which is unlike any other aggregator in the industry, is that we act as a 4PL or a courier partner or a post-checkout partner for the merchant. This means we take the entire responsibility of post-checkout experience, including payment processing, including logistics, including returns. And we act as a single point of contact for the merchant. So this simplifies a lot of things on the merchant end. They are able to coordinate with one single person for all their needs. From a consumer standpoint, they get a consistent experience because we are able to mask a lot of information and provided it in a similar manner to the end consumer. Obviously, this goes without saying that there's a lot of engineering effort from a product as well as process excellence standpoint, and the machine learning algorithms that we have developed on how to select end channel partner, which courier will be allocated to a customer, what kind of messaging and at what point of time those messages has to go to the customer. How do you coordinate all those nuances at the time of delivery? All this is baked into the product, and that is how we are able to deliver a consistent and a better experience.
Got it. Prayas. Completely makes sense, because you cannot have a consistent flow until unless that is driven by certain processes and systems, right?
Yes.
Again, Prayas, one thing which comes to our mind, say example, this has been talk of the town that a lot of new D2C brands actually struggle with the count of COD orders they receive, right? And the delivery partner again has got a greater shoulder to share, where they have to not only deliver the product, they also have to cash and collect, carry the cash and collect and send it to bank to the D2C brand, right?
Yeah.
Now, how does a typical money movement happens, and how important is the delivery personnel here?
Sure. So if you look at industry benchmarks, there are, on a typical mid-sized D2C brand, around 70 to 80% of their orders would be COD.
True.
Which is a very high contrast with the number what maybe a Flipkart or an Amazon gets, because of the lack of trust on the D2C brand side. And it takes time to build that trust, right? Amazon, Flipkart might be enjoying something in the range of 40 to 50%, and 20% can make or break a D2C brand. Now, how the money movement works is, although the order has been placed as COD and you might count it as sale, but this is actually not sale. It is an intent to a sale, because the money realization will only happen if the order is delivered and the COD amount has been handed over to the delivery executive, right? So, and that is where the inefficiencies in the entire process come into picture. And to answer your question, how the money movement takes place is, the delivery partner or the end delivery executive will collect the money maybe via cash. Primarily, it used to be cash. Now these days, they also carry a lot of POS devices or UPI IDs or something like that. They collect that money into a central pool. Then that money on a daily basis is reconciled at the hub or the location where the delivery executive is operating from. That money is then on a daily basis deposited into central bank accounts of the courier partner that is operating that hub or the delivery executive. Then after that, that delivery executive delivery partner will remit on a bi-weekly or a weekly cycle, depending on the contract, to the end D2C brand, and that is how the chain works. So there are at least 3 to 4 hops of money movement from the end consumer to reach it to the seller.
That's really nice, Prayas, bringing that insight to the deep. Again, the question and the follow-up question from my side, I'm more curious to learn about. Say example, whenever there is a certain hog, right? Now every hog will have its own gestation time or a settlement time and everything. How do you see that? Why should platform think about making this banking experience or the money movement experience better for their delivery personnel? Is it important? Is it not that important? Or how do you see that opportunity?
So there are multiple factors that this problem has to be solved for, right? And there are different stakeholders for which this problem has to be solved for. It's not that the delivery partner wants to keep the money. It's just that it is how it is. It's been the status quo. The infrastructure was getting built and all that. And that is where people like us come in, where we try to consolidate and help the merchant also realize their revenue as soon as they can. So, and we have actually launched a couple of products, 2 products specifically in the last few months to solve these specific problems. I'll talk about that a bit later. Right now, every hop, obviously there is a cost to it and it leads to delays. It takes about 4 to sometimes 15 days from the collection or the delivery of the product to the money reaching the end seller or the brand. And it can be so large, right? It is primarily due to multiple hops and the risk that is being adjusted by the courier partner in terms of handling the money. Because obviously the systems are not that robust. issues like a product has been marked delivered, but it is not actually delivered. The money has not been collected by the FE. Stuff like that happens, and yeah, obviously there are nuances to it. How do we solve this problem? Is products like what we've launched in the recent past, and some are in beta, like something called as COD prepay, where we try and send out some messages and some emails of sorts where the customer can pay ahead of the delivery once the order is dispatched for them. So they know the product is coming. I ordered via COD, giving a money back guarantee, saying that if the product is not delivered, it will be refunded within 24 hours, stuff like that. And we send out an email to the end consumer where they can convert their COD order to a prepaid order at a very small price, or even sometimes the brand gives a discount for conversion, right? So this is where I think the embedded finance whole and embedded finance angle comes into picture. And we have seen a lot of uptick on this product in the recent past.
So now, as you rightly quoted, that embedded finance can turn the table,
right,
and it will definitely bring a lot of optimization, especially in terms of the money movement. So how do you see open banking or embedded finance, your scheme of things, or another 6 months from here, how it is going to impact your overall bottom line, top line, and how do you see this opportunity going there?
Sure. So primarily, I think it will translate to a better and a more consistent consumer experience, where both on the merchant side and the consumer side, we'll be able to provide products which were not there earlier. We will be able to solve things like reconciliation and all. We will be able to solve for conversion of COD to prepaid orders. For the end consumer, we'll be able to provide them options on guaranteed return, money backs on returns or failure deliveries, which is primarily the reason for COD orders being placed across the board. So the propensity of you also, or people like us who are accustomed to online shopping, have multiple credit cards, have multiple bank accounts, we also order COD orders from brands we don't trust, because we don't know what will come in, when will it come in, and whether our money is in safe hands or not. So providing and bridging that trust for by encompassing that all those brands and all those SMEs under a single umbrella is what we can achieve via products like Open Finance.
That's really sounds interesting, and look forward for that. Well, thank you so much for sharing your thoughts with us. Now we have come to the final segment, where we have something very interesting. You have to answer that what, according to you, is embedded finance, and the timer starts now, and that time is 30 seconds.
Sure. So according to me, embedded finance basically enables the platform. I think that's the primary use case, where the platform is able to deliver products which are adjacent to their core business offering in relation to finance. It can be lending, can be overdrafts, can be payment collection. Second is those platforms will be able to provide a one-stop solution for multiple needs which the platform user might be going to use multiple apps for. So with embedded finance, you can build products which are much more integrated, much more insightful, have better analytics, have a better reporting system.
Thank you so much, Prayas, for articulating this better. What I can understand is sometimes embedded finance can be an actor. Most of the times we play at the background and being seen as a playback enablers. So that brings the end of this episode. Thank you, Prayas, for answering all the questions so patiently. And this was an episode that how open banking and embedded finance may accelerate adoption of technology and solve complex problems for your business. We hope that you find it useful. Thank you so much. We stay connected. We keep bringing new things, new startups, new startup founders on this episode, so that we learn, adopt, and get newer aspects of business. Thank you so much.
Thanks, Sandeep. Thanks a lot.
Take care.
Yeah.